Friends, welcome to my channel. Let's see where Nifty and Bank Nifty will move tomorrow, what strategy we need to apply, where we need to position ourselves. Friends, if you see like today's in the Nifty, very clearly like there is a big bullish candle, and you notice one thing here, too many stops got triggered here. That means like the buyer is dominating the market, and you can notice like lots of stops are getting triggered. These are the stop losses, because once the stops are getting triggered, the buyer has to buy at the market and market price. Take example, you have started here. If the price is going at a higher price, you have to cover your position somewhere here, and so you have to buy at the market price. So these were the first indication like the market is going at a higher levels. So if you notice one thing, like good amount of from the morning, like good amount of a positive delta was there in the market, and the buyer was very much aggressive. If you notice like it went higher, and it came triggering for the stop losses of the people, the retailers who were bought at the lower levels. So it triggered all the stops. As you can notice, some of the stops got triggered on the both the sides. You can see the stops got triggering either sides, both the buying and selling side. Even at the buying side, you can notice like the zeros. These zeros indicate like the stops. The stops got triggered in the market, and later it was a completely a one side rally, but the momentum was completely slow. You can notice like the good amount of a buying was, the buyer was lifting. Absolutely, there was no seller in the market. The buyer was lifting each and every bit. You can notice a little bit of a selling was coming. It was an algorithmic selling, and once the day's high has been taken out, the market went one side rally. This was the stops, and this was the day's high which triggered, and there was a continuous momentum at the higher and higher levels. At the same time, you can notice like the delta kept on increasing. That means that the buyer is lifting higher and higher prices. So we have to sit at this kind of in trade, and we have to target up until certain round figures like 17,000 would have been idle, but 16,900 and 16,800 the price has turned down for a small amount of a profit booking. You can notice like the delta kept on increasing, and the buyer was lifting each and every bit. So I was not interested to short the market, so I was giving you to buy the only the call options. The call options we made really very good amount of a profit today. So net to net, like if you notice, a good amount of a closing has taken place in the market. Like the buyer was very much aggressive and he has lifted the bits, but the momentum was very slow. So what we might expect for tomorrow's market? Tomorrow either one of the two things has to happen. The first thing should be like a big gap up. Just a second. The first thing has to be like a big gap up. So somewhere the price has to open a gap up, and it has to rally at a higher prices, and somewhere at 17,000 levels we have to see a first 5 minutes candle, and on the top of that we can sell the market and we can book a profit up until 16,800 levels. If the market is opening flat, again we'll be looking to buy the market, because we might the price might go at a higher levels, and it might spend some time and might break on the either side. If the market is opening a flat, we'll be looking to buy the market, and first target should be like 17,000 levels. If you see a big gap down, we'll wait for the price action, but again the gap down will also be bought into, because you can notice like the people who know bought here, again they'll be looking to buy again whenever it is coming at a lower and lower prices, because the liquidity they are getting at a cheaper price. So the big institutions might buy at a lower price itself. So I've explained all the three possibilities. One of two things will happen, like a gap up and the price goes higher, and the first 5 minutes candle we'll see if it is getting red, we'll be looking to sell the market, and the price has to we have to target up until 16,800 levels. If the price is opening flat and if it is coming down, we'll just avoid the market, because whenever it is coming down, the buyers will be there aggressively. They'll keep buying. Again, we won't be, it might be a bit of a confusion, like buyers and sellers will be trying to defend the market. So if you find a proper direction, then we'll be entering into the market. So let's see the Bank Nifty and what the Bank Nifty has done for today. So just a second. Bank Nifty wasn't that much like aggressive. Like the momentum was absolutely slow. At one point of the time, like when the price came to these levels and when it bounced back, almost like even if the price went at 35,170 levels, still the premium was trading at somewhere like 20-30 points premium itself. It wasn't that much premium. So that is why I said like if you want, you can book your profit and you can stay out of the market, because whenever the price is crossing at the day's high point, there should be an aggressive momentum. The price should go very aggressively and the shorts has to trigger very aggressively. But I've noticed one thing, like not too many of the shorts are there. The shorts are covered in the market. The shorts, they don't exist, I feel. So that is why the market was very much passive. You can notice whenever the market went high, there was immediately profit booking. Whenever the market went high, there was a profit booking. Whenever the market went high, profit booking. Whenever the market went high, the profit booking. The algorithms were kept booking the profit. That means there is not much of an aggressive buying on the both the sides. So this was the reason why the premiums were not getting higher and higher. So it wasn't much interesting trade today. So let's see what we can do for tomorrow's market. So if you look into the order flow chart, the order flow was like not too much of a volume was coming today, so I was not interested in holding for a longer time. I was expecting a shorts. I was really expecting for the short covering, so that is why I was saying you, like today is high. If it is broken, like we might see a good amount of a short covering. So this was a very good indication for me, like why I said you to buy the call option somewhere here. And later I've noticed like nothing was going on, so I said you to buy, close your trade at the cost to cost price. And somewhere here I said you to enter into the puts. And we made nearly 50-60 points of a profit. And when the price was reversing at other side, again we entered somewhere here. And our stop loss like was 20-30 points of a stop loss, and on the way up also we made a good amount of a profit, nearly 50-60 points of a profit. And if you notice one thing, like the stops, again the same thing in bank nifty as well, there are too many of the stops got triggered. Again, like the stops, you can notice the institutional stops were triggering on both the sides, and the retailer stops was also triggering on both the sides. This is the beauty of the order flow chart, like where the stops are there and where the stop losses are getting triggered. You can notice the stops, you can notice very clearly the stops are getting triggered. It doesn't make 5 minutes, 10 minutes, 15 minutes, 20 minutes, 15 minutes, 30 minutes, any time frame. You can see where the stops are triggering. Later the market was a little bit of a sideways mode, and there was a breakout, and this pullback we had one stop. Again I said you to buy and made you to sit somewhere here, and even that gave a very rich reward, like 100 points of profit for us. And later it was completely a slow grinding momentum. We don't need to see this kind of a slow grinding momentum. Notice here, and the price went higher, again it came down, it went down, again it went high, it came down, again it went high. This we call it as a grinding phase. When you have this kind of a grinding phase, the option premiums, they don't increase. So that is the time when you need to come out of your positions. Whenever you see this kind of grinding phases, just come out of the position, don't sit of the positions, because we never know, like if this grinding phase continues, the algorithms, they start to book the profits and the price might come at a lower levels very aggressively. So it is better we come out of the position before the algorithms take their profit. So later there was a little bit of a breakout, again the slow grinding momentum. Later again the slow grinding momentum. I said you like 35,250, and later I wasn't watching the trade. The reason behind was like not much was going on. The premiums were not increasing because I'm an option seller, and I made nearly 100, 150, 120 points of profit today, and that was enough for me. And I'm a consistent trader, and I keep consistently making the profits. And whenever I'm making a loss, I'm giving only just 100 points of a loss to the market, not more than that. And if I'm making a profit, like I'll be taking like every day 100, 200, 300, 400 points of a profit from the market. But today the market was not offering much for me, so that is why I just took like 120 points and I was out of the market. Well, if you notice, like a good amount of a buying was taken place in the market. Again the same thing, one of two things has to happen in the market for tomorrow. So whenever you have a big bullish candle, I'll just show you one nice big bullish candle. So whenever you have such a big bullish candle, one of two things has to happen. The market has to retrace at least 30% or a 50% of a retracement has to happen. If retracement doesn't happen, the market has to aggressively go at higher and higher prices up until 36,000. So 700 points at the higher levels. If not the retracement, and market has to stay somewhere in this range for some more time. High probabilities like the market might retrace for at least 20-30% or 40%. Probably you can put your Fibonacci retracement 0.5. Some people might trade 0.36 or I don't usually use the Fibonacci retracement, because for me, like I'm a very good price action trader. I know where the price is getting reversed. I don't see this kind of an M patterns or W patterns. I have my own strategies. Whenever the price is reversing, they give you a very good indication. If you notice here, today's there isn't a any kind of an indication for you. It is absolutely, there is no W pattern. Some professional traders, so called themselves, they call themselves as a professional traders. When you see even at a 5 minutes time frame, there is no way, there is no W pattern for you to see the reversal. There is just a V reversal. So I've identified somewhere here there is a V reversal is happening, and I said you to sit in this trade, and we made a very good amount of a profit, like 50, 60 points, 70 points, without giving any stop loss for the market. We made a profit. I don't believe in this kind of W patterns or M patterns. Yes, sometimes these patterns they do work, but they give mainly they interpret you and they make you to sit in a wrong side. So I don't believe in these kind of patterns. I'm not a pattern trading guy. I know where the price is getting reversed, and I know where the buyers are entering into the market. According to that, I'll trade by myself, and I'll give you the calls based on that itself. Well, tomorrow we might see the market, if the price is crossing, if the price is going higher, and if it is going very aggressively, and if 35,500 if it is taking resistance, and if you see any red candle, we'll definitely buy the put options, and we'll target up until somewhere like 35,200 levels. I would say like 35,200 will be idle. Up until here we can see if there is a big gap up, and if the price is going very aggressively at a higher levels. If the price is opening a flat, and if the price is going higher, once the swing crosses, we'll be definitely looking to buy the market, and first target should be like 35,800, and next should be like 36,000 levels. I don't think like market might go aggressively. There should be a profit booking, so market might come and retest certain levels like 35,000 levels or 35,200 levels, and later the market might decide either side. So there should be a profit booking, because the people want to bought here and here, they have to book their profits. Only the algorithms, they were booking the profit. I can notice like these are the algorithms, not the big institutions profits. The big institutions, at least they will be buying like 1 or 2%. If they are buying 2%, their profit will be like 1%. So that means like 300 points the market has to come at a downside for the profit booking for tomorrow. So which normally the retailers called as a retracements. Well, I explained you most of the things. If you like my video, please do subscribe my channel. If you have any queries, you can even WhatsApp me or even comment at the video. I'll reply for you for your comments. I hope you like my video. Please do subscribe my channel and share with your friends as much as possible. Thank you so much.